Ever feel like you're drowning in a sea of receipts and payments? Like your business transactions are just a chaotic mess? Well, you're not alone. But today, we're going to transform all that chaos into pure clarity using one of the most powerful tools in accounting, the cash book. Let's dive in. So, here's the game plan. We'll kick things off by talking about a huge problem lots of businesses face, what I call the one book bottleneck. Then we'll unveil the solution, your brand new cash command center. From there, it's all about leveling up. We'll start simple, then we'll add discounts into the mix, and finally, we'll bring in the bank. And by the end, you'll know exactly which tool is the perfect fit for you. All right, so picture this. Your business is starting to take off. Things are going great, right? The sales are rolling in, you're buying supplies, but all that success, it brings a brand new challenge with it. Does this look familiar? Just this pile of transactions, every sale, every purchase, every single payment, all piling up. Now, don't get me wrong, it's a fantastic sign of growth, but, it can get overwhelming fast, especially if you're trying to cram it all into one place. See, when every single thing, we're talking cash, credit, sales, returns, you name it, gets shoved into one giant journal, you end up with a massive transaction traffic jam. The book itself gets ridiculously heavy, only one person can even use it at a time, and trying to find one specific transaction from 2 weeks ago, it's a nightmare. It's just not built to handle growth. So what do? How do we fix this traffic jam? Well, we need to build some express lanes. And that's exactly where Subsidiary books come in. This is how we build our new streamlined command center for our finances. Think about it like this. The old way is one clogged highway where everyone is stuck. The new way? It's all about creating separate, super fast express lanes. Each type of transaction gets its own special book. All your cash stuff goes into the cash book. All your credit sales go into the sales journal, and so on. All of a sudden, everything is neat, organized, and way more efficient. Today, we're zooming in on the most important one of all, the cash book. And it has this secret weapon, a special feature that makes it incredibly powerful. You see, the cash book acts as two things at once. It's the first place you record a transaction, and it's also the final ledger account for your cash. That dual role, it's a massive, massive time saver. Okay, let's start at the beginning. Level 1, this is the single column cash book. And it is absolutely perfect for any new business that's pretty much just dealing with physical cash. Let's take a look at this example from Naveen & Co. The rule here couldn't be simpler. Any cash that comes in goes on the left side, the debit side. You can see the capital they started with and the cash from sales. And any cash that goes out, that goes on the right side, the credit side, like when they bought furniture or made other payments. So after you've tallied up all the money that came in and all the money that went out for the month, you get this. You just subtract the total payments from the total receipts, and boom, Naveen & Co. knows they have exactly 24,600 rupees of cold, hard cash on hand. It's simple, it's clear, and it's super effective. So the most important thing to remember for level 1 is this. It's just for physical cash. Cash in on the left, cash out on the right. The number you get at the end is literally the cash in your drawer. And because it's a special book, you don't even need a separate cash account in your main ledger. How efficient is that? Okay, but businesses grow, right? Things get a little more complex. What happens when you start offering discounts to your customers? Well, suddenly our simple little book runs into a problem. And that brings us to level 2, the 2-column cash book. This is the big question, isn't it? When a customer pays you, but they pay you a little less than they owe because you gave them a discount, where do you even record that? The single column book? It has no place for it. The solution is actually pretty elegant. We just add a column. Now you can see we have columns for both discount and cash on each side. Take a look at this entry for Singh & Co. on August 7th. We got 1,980 rupees in cash from them, and we gave them a 20 rupee discount. Both are recorded right there, side by side in the same entry. And the same logic works for discounts we get from our suppliers on the payment side. So, after we account for all the cash transactions, we balance the cash columns just like we did before, and we find our final balance of 1,490 rupees. Now, here is the crucial difference. You don't balance the discount columns against each other. Nope, you just total them up. So yeah, the 2-column book is a fantastic upgrade. It lets you track your cash and your discounts all in one motion, which saves a ton of time. Just remember the golden rule. Only the cash columns get balanced to find out how much money you actually have. All right, we've mastered cash, we've mastered discounts. But let's be real, in today's world, almost every business uses a bank account. And this brings us to the final and most powerful version, the three-column cash book. This is the ultimate challenge for any growing business, right? You need to know how much cash you have in the register, but you also need to know how much is sitting in the bank. You need one single place to see it all. This brings up a really important move. How do we handle transfers between the two? So when you take cash from the register and deposit it into the bank, you make a two-part entry. First, you credit the cash column because physical cash is going out of your hands. Then, at the exact same time, you debit the bank column because your bank balance is going up. It's the perfect way to track an internal money transfer. Okay, let's look at the whole shebang. You can see how every possible transaction has a home here. A customer pays with cash, the cash column goes up. A customer pays you with a check, the bank column goes up. You pay a supplier by check, the bank column goes down. It literally becomes a complete financial dashboard, all in one beautiful view. And this is the payoff. At the end of the month, you don't just have one final number. You have two absolutely critical balances: the exact amount of physical cash you had on hand and the exact balance sitting in your bank account. Now that is some powerful information to have. We have done it. We have gone through all three levels, from the simple starting point to the full-blown command center. So the question now is, which one of these tools is the right one for you and your business? This summary chart here pretty much makes the decision for you. It's super simple. If you're a small operation that only deals in physical cash, the single column is all you need. The moment you start giving or getting discounts, it's time to upgrade to the two-column. And as soon as you start using a bank account for your business, well, the three-column book becomes absolutely essential. It's designed to grow with your success. So there you have it. You now have a complete toolkit to bring perfect order to your finances, from a simple cash box all the way to a full banking operation. The only question left is, which tool is the right one for your business journey right now?